everyone. Thanks for joining, the last panel of, this session, I guess. So we have a great set of panelists. I'll let them do the talking. So obviously, we're going to talk about, the private markets versus public markets, and our panelists here will be able to help us understand this trend globally, and also we'll touch upon the GCC region, the specific opportunities and challenges here. So the first question I'll direct to Lubna. So can you give us an overview of the global market trends over the past few years, and how does the new dynamic between public and private markets influence the investment community?
Well, thanks for having us, and I don't think this one's going to be as upbeat as the panel ahead of us, so bear with us. Maybe just to frame the private versus public market dynamic, I think the MC just mentioned there's a shift in the past few years with investing moving from the public markets into the private markets. The number of PE-backed companies globally has basically mirrored the rise of that mirrored the decline in the number of listings that we've seen. Fewer businesses are choosing to go public over time. Just as an anecdote, in the US, back in 2000, you had about 12,000 listed businesses. Today, that number is about 3,500. This is driven by a number of reasons: regulatory considerations, access to flexible raises, and more importantly, hopefully higher returns and lower volatility. We've seen buyouts consistently outperform public markets on a longer horizon, with the exception of the recent underperformance to the S&P 500, but that has been predominantly driven by the concentration of the S&P by a number of highly performant mega-cap stocks, what we call them the Magnificent Seven. That concentration of these stocks really indicates that there is a higher inherent kind of risk and lower diversification in that index itself. So what we've been seeing in the recent kind of years on the private equity side, you've seen basically a significant decline in activity post-COVID. Then we went into a reversal of that as the financing market came through and macro kind of outlook was positive, probably record deal activity from a private equity perspective. That all came to a halt when we got into the early 2022s, basically lacking access to financing and an outlook that was slightly more negative. We've seen this year what I would call a slight improvement as we started the year. I think the US probably is in a better shape than Europe. Europe still has some volatility. We've seen secondaries kind of improve in the number of deals. That being said, the divergence in valuation between sell side and buy side is still there, which led in Europe and specifically to see a lot of take privates happening. 40% of the deal activity in Europe this year has been P2Ps, technically. So that basically tells you what's happening on the public markets. So we have more take privates. Listings have been quite muted over the last 2 years. We're seeing early green shoots these days. But it's worth mentioning that's probably a Western kind of phenomena when it comes to markets here that probably looks incredibly different. So looking just forward, I think the fact that we had slowdown in the activity, somewhat shut IPO markets means we're sitting on an unprecedented kind of backlog of deals in the private equity world. In Europe alone, we have 800 businesses with a valued at around $2+ trillion that have an average kind of hold period of 6 years. That basically means we haven't been returning capital to our LPs. There's a lot of emphasis on DPI. Without that, we are not going to get fundraising moving going forward. And even with that, you have an unprecedented 2.6 trillion of dry powder sitting there waiting to be invested. So it might be a bit positive to say that we hope for better days in 2025 from deal activity, especially in Europe, but definitely with markets kind of coming back, that these factors at play, and credit markets coming back in a frothy way, we hope for a good 2025.
Perfect. So next question, Paul, I'll bring you in. Your firm is headquartered in Montreal, and you've done a lot of things in the North American market. Can you share your experience with us?
Yeah. So our group overall administers about $3 trillion of assets and has $1 trillion under AUM. I run the private markets side of that, which is still very small, 30 billion. But I think that shift is going to change massively. And I see a few drivers of that shift. One is, I think the regulation around governance in public markets is becoming increasingly constraining for all the wrong reasons. And so I think the ability to exercise ownership and being an active shareholder in public markets is becoming more and more constrained. And those constraints don't exist in private markets. And so we believe our ability to change outcomes via action is better in private markets. There's also a major trend in North America, which is the retailization of alts. If you look at every major platform, today I think 50% of Blackstone's flows are retail, 70% of Blue Owl's flows are retail. The biggest initiative that we're focused as a group is retailization of alts and making privates accessible to retail. I think historically pension plans have shifted, to very high private allocations. That's being followed by insurance companies, and I think the big wave now is wealth markets and the broader retail markets, and so we're looking to play a major role in democratizing that. And so, I ultimately sit on the boards of public companies. I sit on the boards of private companies. Every day of the week, I'd rather sit on the board of a private company.
Got it. Yes, so honing into the region we're in, Arvind from ADGM, obviously, how do you feel like the things stand in the GCC countries in terms of the, development in private markets? Because Lubna just mentioned it's a completely different situation here. So please share with us.
Thank you for that. Actually, the mood here is a little bit different, right? Especially in the public markets. The UAE especially, the region as a whole and UAE in specific, we've been going through a bit of a Goldilocks period. So if you look at 2023 alone, we had about $31 billion of FDI, so there's capital flowing into the country. And if you look at the total market capitalization of our two exchanges here, they've crossed $1 trillion. So it's actually interesting that you're seeing flows both on the private and public side. If anything, today I would say it's more skewed on the public markets. And I think for the reasons you said, Paul, I think there's retail liquidity. If you look at all the issuances that have happened over the last year or so, they've been oversubscribed multifold, right? So that tells me that there is a lot of institutional but also retail demand. On the private side, if I can put on the hat as ADGM, we've always been out there trying to promote it, right? Because we want to ensure that market participants have different pools of capital that they could tap into, depending on their stage of maturity. We are seeing players come in, right? So we've seen some players come in, both domestic and international, investing into the region. We've seen that over the last few years. We've seen deals with Aldar, with ADNOC, with multiple other participants. You saw ICD and Brookfield investing in ICD, et cetera, et cetera. So we are seeing private equity and private credit transactions, international and domestic, probably not at the same scale as probably what you've seen in other parts of the world. But in general, the mood is very buoyant. Public markets continue to do well. Given the pipeline of transactions, you're talking about potentially doubling of the market cap in the next couple of years. So yeah, I think the GCC is a little bit different at this point.
Right. Just a quick follow-up. I guess, why is it important to develop private markets in this region to support the growth?
I think it's for the same reasons that you want to develop private markets anywhere in the world, right? Because you want to give people choices. Why do people go to public markets, right? It's mainly liquidity, right? That's the big driver to go to public markets. As the earlier panelists, Lubna and Paul said, there has been a situation where there's been over-regulations, potentially in some other markets. in the UAE, in Abu Dhabi, we pride ourselves on actually deregulating things, right? Keeping things as simple as possible to make sure that we are open for business. And so the public markets is doing well. Why is private markets important? It's because it just gives new pools of capital, right? The banking market, I'm sure, Sammy will talk about this more. With the Basel III regulations, with IFRS, the ability, especially on the credit side, is limited, right? And with the massive influx of new businesses, but also businesses being set up in the region, having access to those pools of capital, I think, Eileen, is very, very important.
Got it. Sammy, you're just being called. So with your experience, what are the gaps you're seeing in developing private markets in the GCC?
Okay, so starting, I'd just like to point out that there's some real, very good positive enablers, right? One is the regulation that we have here through ADGM and the IFC around things like getting paid back, bankruptcy, foreclosure, things like that. So that's a big positive. And the second thing that's a big enabler in this region is a very high number of high net worth clients that are looking to invest in cash flow positive, high return types of risk. And so those are two sort of factors that are sort of creating, if you will, the desire to see more private credit in this region. If one thinks about what some of the constraints are, I'll start off by, we have to think about how we define the perimeter. So when you're working in the US market, you become very specialized. You focus either on direct lending, you focus on venture debt, you focus on broadly syndicated loans, and so on and so forth. If somebody comes to operate in this region, there's not that sort of scale. So one has to sort of be flexible. Any sort of fund that comes in to look at private credit needs to be able to function across all of these asset classes. Everything from mezzanine debt to real estate to venture debt and so on. And that's sort of the number one. So it's how you define the perimeter. And whoever's coming here needs to have a broad perimeter. The second thing is, how do you originate? So, the markets in the US are based to a large degree on lending to private equity-owned companies. So all you have to do is sort of call up the private equity company. They'll tell you what 100 companies they have that might be in need for borrowing money, and that's an easy way to access 100 different borrowers. I'm just simplifying it. But here it's much more challenging. So how do you develop that origination capability? How do you source that business in this local market when you don't have a footprint? The solution potentially is working with local partners. We are exploring that opportunity with a number of different funds globally and seeing how we as a bank that's well embedded in this region can be helpful in that regard. The third is, how do you anchor the demand for this sort of product in the local investor base? And so we know that we have a whole gamma of very strong and powerful global sovereign wealth funds that play across private equity and private credit across the globe. But who else do we have in this market that we can use to anchor deals? And as I said, part of that is access through a very strong private banking network. I think high net worth individuals that can have the opportunity to invest in sort of cash on cash returning investments will obviously is one of the linchpins to success in this region. And finally, I think one has to think about, ultimately, when one builds a business here, is how do you sort of optimize your capital structure? And so having access, much as US funds and European funds have access to leverage in the US and in Europe, how do you access that leverage here? Obviously, having banking partners in that regard is quite important. And I think, again, that sort of completes, I think, the analysis.
Thank you. Thank you for that. I think the audience would be very curious about, what specific opportunities in the private market in this region. So, if I may call in Lubna or Sammy to mention about any deals or case studies in the past few years that you can share with us.
Yeah, sure. I think we as Carlyle probably came in a bit early to this region. We set up a fund in 2007 that was ahead of its time, probably. I think the one thing that we look for when we're kind of thinking about investing is exits. It's the first thing you think about. And the importance of, a deep market that can actually allow you that exit. I think in the past 10 years and more rapidly in the last 5, the markets here have gotten far more sophisticated, deeper, deregulated to some extent. There's a clearer path, there's certainty to how you can exit it. Maybe the private equity side is still less developed, but you have public markets that can provide a really solid exit path. So I think that alongside the improved governance gives like a good pause to it's time to come back. There's a ton of opportunities where there's a lot of growth to look at. We've invested from that fund in a business called LMR that was based in the GCC, and it took us 10 years to exit it because the market, like the growth was there. We were growing. We did incredibly well in the asset, and we exited quite well. But when we came to exit, the market was different. It was a lot easier, a lot more transparent also, which gives investors like us a lot of comfort to go in. We continue to look at deals as we sit today. We don't have a specific vehicle, but we look at deals in the region, and we look to do them in partnerships with good either sovereign wealth funds or good families that we have had long-standing relationship with. The partnership, I would say, in a region like the GCC is incredibly important.
Sammy?
Yeah, so let me start by touching on 2 different types of deals. So one where I think we're almost lead the way in this region, I would call it structured minority interest transactions. So this is where large companies like ADNOC, Aramco, DP World have sold equity, minority equity in a structured format to international investors. Each one of these deals has been between 4 and I think 5.5 billion. So these are significant transactions, and as I said, this sort of region, in a sense, is leading the way in those deals. Now, what is the implication of that? I think those sort of deals are definitely sort of being done for obviously capital optimization, for managing debt and equity, managing ratings and other things like that. But I think going forward, I think one can see this sort of same technology being applied to sort of middle-size or other corporates in the region. So that's sort of one area where I think we can see a lot of progress and development. In other areas, if we look at a couple of sort of growth capital or growth companies like Tabby and Tamara, these are 2 buy now, pay later lenders who've recently raised a number of equity rounds, as they should. Then they followed on doing what we call ABL, or sort of bank debt, secured by the underlying loans, these buy now, pay later loans, and then they also secured mezzanine debt, again through the sort of private credit sort of markets. And these companies have preparing themselves ultimately for an IPO at some point. And so this is the sort of, and there are many more examples like that in this region, but these are 2 sort of good examples of how sort of private credit has come to play and to benefit some of the companies in this part of the world.
Thank you. Coming to the final part of our discussion, actually, I think people are wondering the outlook and the drivers for the development of the private markets in the GCC. So if I may, perhaps I'll start with Paul. What's your observation? Any sectors, companies you think we should look out for?
Well, firstly, I want to say I totally agree with what Sammy just said. We have a structured equity fund focused on financial services, and I also agree exactly what Lumna said. The biggest challenge when you're doing straight equity is the exit.
Yep.
And structured equity and credit actually solves that challenge because there's a contractual exit, and the door is predetermined at the beginning of the contract. And so I think those are actually great solutions, and we're actively looking to invest in those areas in the region, including in asset-backed loans in the fintech space. I think one of the things that would get me very excited about the region is that I think all regions follow a natural cycle of capitalism. When in the early stages of development, capital markets are not that sophisticated. And so ultimately, families and holdings and conglomerates are the arbitrageurs of like capital. And so if you look in the region, you have a lot of highly diversified family groups. That will change because ultimately, to compete globally, you need focus. And I know because my family was a highly diversified family group until we focused and won in financial services. But we used to own ships and pulp and paper, and we own 25% of Warner Brothers. So we own a lot of random stuff. And we've focused, and that's made us win. And I think ultimately for a lot of families in the region here, they're going to have to look at their portfolios and decide, this is the company that we're going to bet on as a family, and we're going to bring in private equity partners for these other 4 things. We're going to IPO this. We're going to bring in professional management, and we're going to totally simplify our structure. And that may be controversial, but I think if you take a 20-year vision of where these economies are going to go, it's going to be simplification of family structures. That will cause private markets to deepen, because one of the challenges for private equity firms now, if you go and you look to buy a company in Saudi, you know, you kind of feel you're playing an insider game and you're not inside. And so ultimately, I think over time it's going to simplify, streamline, and focus, and that will lead to the growth of private markets in a great way, and ultimately the growth of public markets.
I see. Arvind, please help us, close this discussion. ADGM obviously is, attracting people to base here. What are your messages to, the investors or companies here?
No, I think, I agree with everything that they all said. To start with, if I were to just pick on 2 themes, right? One is mid-market companies. So it's, as they go through, as you have more companies coming on board, new companies, startups, mid-market, and then they go to mid-market, it's important to have pools of capital that takes you all the way to the public markets, right? Now, those pools of capital typically could come from the banks in terms of debt. It could come in terms of private debt. It could come in terms of private equity, right? And I think all of those pools of capital are very important, for us to develop. So as ADGM, what we've tried to do is set up a regulatory framework and build ecosystems that can allow for that, right? So we've got, specific light touch regulations. For example, for venture capital, we've got light touch regulations for private credit. So we brought in specific frameworks to look at those elements and then try to build the ecosystem around that. So that's one part. The second part is the family office space, right? The UAE is today 70 years of independence, and we're talking about 3rd generation families in a lot of cases, and I think it's extremely important, from a planning standpoint, whether you want to tap into public markets, and a lot of them are looking to tap into public markets to get the right governance, the right structures, etc., or you may want to unlock some value through private markets, right? And I think governance, as they said, is a very important piece. So again, being biased from an ADGM perspective, I guess, but from an ADGM perspective, we've got ADGM Academy that we set up as a knowledge partner, right? And what do they look to do is, support on those elements. So whether it's on, supporting the family offices, right? And there's some very interesting things that they're doing in that space, or whether it's in terms of, governance, and having the right governance in place as you start going down the path. So yeah, I think those are a couple of things. So for us, we believe the future is very bright, for the region, for the UAE and Abu Dhabi. And as ADGM, the most important thing for us is to have the right regulatory systems and then build the right ecosystems to make sure that that is possible.
Got it. I think we're running out of time. But if I may, because Paul just mentioned what gets him very excited about the opportunities here, just very briefly, what gets you guys excited about the opportunities in the GCC?
What gets me excited about the opportunities here is coming to an event like this one, where I think I've spoken to probably 10 or 15 investors that are poking around the region, looking, some of whom are getting office space here, some of whom already identified teams to come and move to the region that are starting to look at this region. I mean, we do a ton of stuff outside this region. Obviously, we help all the major sovereign wealth funds finance their U.S. and European businesses. But looking here, it's quite exciting to see investors from outside looking into this region.
Lubna, just one.
Well, quickly, I invest in healthcare. That's my area, and there's a lot of change on the global kind of scene with regards to healthcare, where it'll be done, how the U.S.-China relations kind of play out, and there will be changes in the global kind of environment to who's playing what role. And I think in that change, you're going to need incredibly focused vision, speed of execution to kind of take advantage of some of these disruptions. And I think, you know, places like here, and we've seen that in different area, governments move very fast compared to other places to create ecosystems to support, and I'm hopeful to see some of that on the healthcare arena as well.
Perfect. Thank you so much, everyone, to listening. Thank you, our panelists. Thank you.